stretch. And 2008, that financial crisis was tough too, and very difficult business-wise. This, though, is a whole different animal. I think the overlay of the pandemic, not being able to meet clients in person, not being able to be around people to go and socialize and physically meet and shake hands and hug and look people in the eye, I think in some ways makes it more difficult, because with this economic issue, it's not like everyone could just put their head down and go to work. We're kind of sidelined. Many of us are sidelined or not able to do what we would normally do in a difficult time, and that's frustrating for a lot of people. I know you're not in the business anymore, even though you and I do work together. You do some consulting for the practice still, and you and I keep in touch regularly. Does this seem worse than the financial crisis in your mind, at least economically?
Absolutely. I had a lot of empathy when you were talking, because that's exactly the way that I was feeling, because I was in the same place. I was at work, 9/11 and back in, was it 70, and when interest rates were 13, 14%, and the sell-off on October 13th and 72. I mean, I've been around a long time too, and I just have a lot of, what's the word I'm looking for, just concern, because who knows? You don't even know. We still don't know. We still don't have all the answers. We don't have a serum for it. Anyway, there's so many things we don't know. It's easy to make I remember when I was going to business school, they had all these business cases, and they would give you all the information you needed to make a decision. Your job, as a student, is to use the information you had, but you always had enough information. Well, we don't have anywhere near enough information to make good decisions. That's what makes, right now, the most challenging time that I've ever seen in the markets. And I'm just glad I sold my business a few years ago, because I don't know what I'd be doing right now.
Yes, and you bring up a good point. The level of uncertainty across a very wide range of topics is another reason why this is so uncomfortable. In the financial crisis, it was really centered around, the epicenter was the financial system, the banks, mortgages, the housing market, the real estate market, and those are significant areas. But this has affected such a wider range of industries, and with the notion that, hey, lots of people just need to stay home and do nothing is so unprecedented. But the level of uncertainty is really difficult. And one of the things that has surprised me, that with all of this uncertainty, and, give me a little bit of a subtopic in what's going on with the healthcare or with the economy or the jobs market, and we could talk at length about intense uncertainty. But the market is really, over the last couple of weeks, as it's rallied off the bottom, has really shrugged off a lot of the uncertainty and is sort of cavalier about it. And candidly, and I've shared this with clients, so I'm not talking out of school, has surprised me. It makes sense to me, Dean, that the market got off the mat, because some of the worst estimates about fatalities in the U.S. do not seem like they're going to materialize. It is a sad state of affairs how many people have passed away, but where we are as of today is only like 10% of what they were predicting just a few weeks ago, where estimates were for hundreds and hundreds of thousands of fatalities, possibly crossing into the millions, and that corresponded with longer shutdown periods for the economy. So that seems to have passed. As tragic as it is, the numbers are much more manageable, and we seem to have flattened the curve. There's still a lot of uncertainty, but we do seem to have flattened the curve, and it doesn't seem to be spiraling out of control, the number of cases as well as the number of fatalities. But we still have lots of uncertainty, and so I could appreciate why the market bounced back, given the worst in terms of fatality numbers haven't happened. But I'm still a little perplexed on why the market has shrugged off all of the uncertainty, including what future corporate earnings are going to be for the foreseeable future. What do you think about my being puzzled?
Well, I totally agree with you there. You have to. One of the things that I was just thinking as you were talking is that it's very rare that anyone in our business ever sells out and liquidates like we were forced to do that. And a lot of hardened and seasoned investors also were forced out. Now, those people have been living with the market for many years. They're hardened, and they want the market to do well. And as soon as they see any good news, they're going to jump back in. And that's what's happening. You've got guys coming back into the market that normally would never get out of the market, and they think the only way I'm going to get compensated in the market is to be in the market, so I got to get back in the market as soon as I can, regardless of the news. As long as it isn't worse than it is yesterday, I'm going to come back into the market. And that's what I think you're seeing. But I don't think they're being completely rational about it. I think you are, but they're not. So they're jumping back in, and they're going to continue to jump back in. Now, I don't know what's going to happen, but they don't have enough information to make a good decision.
Sure.
So your dollar cost averaging is the only way to go if you're a professional and responsible for other people's monies. But people who are aggressive, they're jumping back in, and they're going to continue to jump back in.
Yes.
It's very confusing time.
And it does make money management, at least in the short term, unless you believe in buy and hold no matter what, which I don't believe in. I believe in the first part of the phrase. You buy and hold, stay invested over the long term. But the no matter what part is a little bit where I push back, because if we had hundreds of thousands of deaths in the U.S., and that caused a shutdown and an even greater dislocation in the economy than we've seen, selling earlier on in this episode would have proven to be a wise thing. The fact that the worst case scenario didn't happen doesn't mean that it wasn't a realistic proposition. So I do push back some on the people who say you buy and hold no matter what because things always work out. Well, they don't always work out. And I know in 2008, for most of my clients, we went to cash in mid-September of 2008. At that point, Dean, the market was at 14,000 at the high. When we sold out, the Dow, talking about the Dow now, the Dow was at a little over 11,000. So clients had absorbed quite a bruising. But the market went on to go from 11,000 all the way down to 6,600 at the low 7 months later. And so I'm not saying that's necessarily going to happen this time. I don't have a crystal ball, clearly. But I do think that with the dollar cost averaging, working back into the market incrementally over this next stretch of time, we may get opportunities to buy in on some weakness because this recent market strength may not last as the economy begins to get going and might have some difficulties getting back up to speed. It might not happen as fast, as cleanly as some people are envisioning. But I like that we're dollar cost averaging because I like that we've reduced risk, and I like that we're allowing time to work on our side. But this market rally has made that a trickier positioning because it's bounced back faster than it did in 2008, the last time I used this playbook. What do you think about that?
Yeah, I totally agree with you. It's just you really don't know. You have to do the best you can with the knowledge you've had and the experience you've had. I can't second guess you on anything you've done. You just don't know. You don't know.
So if if I were to ask you, which I'm going to ask you, so I shouldn't phrase it that way, right? Is we were in a bull market that lasted for almost 11 years, a little shy of that. It was one of the great bull markets of all time. It was the lengthiest of economic expansion in history. The job creation during that period was unprecedented as we created jobs month after month for over 10 years. And then it completely changed. We had a bear market. The market, as we discussed, at least of this recording, has bounced back, not to previous highs, not to where we were on January 1st, but has bounced back. have we already given birth to the new bull market? Are we in the early stages of a bull market, or are we in an extended bear market where we'll hang around these levels, maybe a little lower, but not revisit the highs for quite a while? What would be your guess? I know you don't have a crystal ball, just like I don't, but what would be your sense? Do you think we've already given birth to a new bull market, or is it premature to think that?
Well, I have to say, I think we're on our way to another bull market, only because of what the Fed is doing. The Fed is really pro-markets. They immediately react and lower interest rate and lower the cost of money. Remember the three factors: consumer spending, business investment, and governmental spending. Well, the business investment is much greater if the lower the interest rates are. So the interest rates are almost at zero. So you could argue that the Fed is on our side, so the recovery is going to be faster, and I just think it's going to start again reasonably quickly to another bull market, because the Fed is on board more so than I've ever seen before in 30 years with supporting, the strength of the markets. It's amazing.
Sure. No, you bring up a good point, because, in my mind, Dean, there's two adages that have been around forever, and one is don't fight the Fed, meaning that if the Fed has a mind to do something and they're acting towards that goal, it's difficult to bet against them being successful. Don't fight the Fed. The second thing is the adage that the market doesn't like uncertainty, and when you have more uncertainty, the market is going to be more risk averse and have more downside. And to me, over these last couple of weeks, we've had a little bit of a clash of those two adages. On one hand, there's don't fight the Fed, and the Fed is pumping an enormous amount of liquidity and expanding their balance sheet in ways that make the 2008 activity by the Fed look like child's play. I mean, it's just so much larger and so much more overwhelming in terms of the dollars and the areas the Fed is working on. But then you have the uncertainty of the healthcare, the economy, the shutdown. Like I said, the uncertainty is off the charts in my mind. But so far, don't fight the Fed adage has beat out the market doesn't like uncertainty adage over the last couple of weeks. But what I wanted to ask you about is a lot of people will begin to be concerned about the repercussions of the Federal Reserve's activity by pumping that much liquidity and expanding their balance sheet as much as they have, and to be as intrusive into the private markets as they have been, will have perhaps unintended consequences and negative consequences down the line. A lot of people are not focused on that yet, but would you agree with me that that will become a little bit more of a topic once we get past the pandemic and things begin to recover? What do you think?
Well, it's interesting that the Fed used to increase interest rates so much that you go from a boom town to recession overnight because higher interest rates just shut down business investment completely. Now it's the opposite, because what's going to happen: inflation. And what's going to happen if they don't control it, then they're going to have to raise interest rates again. And the confusing thing is that the strength of the dollar can work for or against you. And depending on what we do with our interest rates is actually dependent upon what's happening in the rest of the world. So the complication of how fast the U.S. economy recovers and the interest rates are going to be impacted by what's happening, overseas and overseas markets. So it's just another factor of uncertainty. You just don't know. You just do not know.
Yeah.
So I'm glad I'm not sitting in your seat, because I'm one of these guys stays in forever, and regardless, because I've been in this so long, I just have this emotional feeling that the U.S. economy will pull through anything, but that's not a rational thing. That's just because I've been around too long.
Yes.
So.
One last topic, just because I did cover it on the investor update. Are you shocked to see where oil prices are and what you're seeing when you fill up your car at the gas pump?
Absolutely. It's unbelievable. But that's another reason for a fast recovery, because basically oil is used almost everywhere. And if the price of a factor of production is that much lower, it's going to ease the stress on businesses so they recover even faster. I've never seen oil react